6 stocks I bought yesterday, and why did I buy those stocks? That's what we're about to go through in this video here today. Additionally, I'm going to show you the entire $2.3 million public account. We're going to talk about any upcoming moves I have in regards to that $2.3 million public account, what I'm kind of thinking there, diversity, all those sorts of things. So got a lot to get into in this video. Hope everybody enjoys it. I always appreciate everybody that smashed that thumbs up button, and I also appreciate everybody that has subscribed to this channel. We just hit a new all-time high in subscribers in the history of the channel, so I appreciate y'all. And yeah, let's go ahead and dive into this, okay? But before we get into the 6 stocks, I just want to cap off yesterday's video, right? Yesterday's video, I covered why I sold a portion of my Tesla stock, right? Around 10-ish%, somewhere around there of my Tesla shares, right? And my overall take is way too many people are willing to be yes men for Elon. And when I say that, I'm talking about the investor base. Way too many people are willing to just give the benefit of the doubt and say, oh, it's okay, this takes long, and this is okay, this. And they don't realize that this lack of basically the investor base of Tesla, I'm just going to say it straight up, it's gotten very soft. Very soft. I'm talking pillowy soft now at this point in time. And these folks have gotten so soft, they're not willing to call out Elon Musk, and they're not willing to call out Tesla when we're moving too slow, when they don't realize day by day by day our advantages are being taken away. They don't even realize what the Chinese have in regards to those vehicles, and how 5-7 years ago, Tesla's electric vehicles in China were miles ahead of the competition. They don't even realize that now in the marketplace today, there's vehicles in China that are just as good as Teslas. They don't realize that years ago we were so far ahead on FSD, and they don't realize that today, literally today, in the United States of America, people can get into a Waymo with no driver in it and it'll drive them to where they want to go. They don't even realize these sorts of things, and so the investor base has gotten very soft, very soft. And I think Elon's got a bunch of yes men around him. I think the investor base has turned into a bunch of yes men. And therefore, there's no accountability there. And so if things take forever, if projects take years and years and years, and you say you're going to come out with this vehicle and it takes 5, 6, 7 years to ramp it, no one's really batting an eye at that, really. And it's going to create, that's how you end up creating the downfall of a company. And I don't want to see it with Tesla. This is too special of a company with too special of an employee force to really see this, right? I don't know if you guys ever heard this great saying here. I love this great saying. It says, hard times create strong men. Strong men create good times. Good times create weak men. Weak men create hard times. Let that sink in for a moment, and I think that's a lot of Tesla shareholder base, and I think that's honestly even Elon to a certain extent, and why his focus is not on Tesla the way it used to be many years ago, right? You got people fluffing him up all the time. Look at this article from CNN 14 hours ago. Elon Musk is on track to soon become the world's first trillionaire. Yay, Elon, give yourself some more pats on the back, right? Soft. Right? Look at this. Number 1 richest man in the world. He's no longer the hunter he used to be now at this point in time, right? He's sitting with that $250 billion net worth. He's well ahead of Jeff Bezos. And, when you've had that much success, you're going to attract just yes men all around you. No one's going to push back against you because they're too scared. They're like, well, his net worth is so big. When they don't realize what got him to this place was an incredible grind at Tesla. Let's never forget that, right? It's that Tesla grind that got him to this place. And, when you start to divert your attention over here, and Tesla just becomes another, whatever thing, you're going to start to get whatever results. And if you look at Tesla's financial results, those are whatever results, right? I went to his X page and I counted up how many posts, reposts, different things he's done on X just in the past 24 hours. I counted 41, and I was like, I'm done counting this crap. Like, it's ridiculous, right? 41 posts, reposts, all this sorts of things in the past 24 hours. That's definitely going to give the impression that you do not care about Tesla. You care about posting, whatever, okay? And so that's not a good situation. So the bottom line is, all of us as Tesla investors, we've got to hold Elon Musk accountable. We've got to hold the overall Tesla teams accountable and push them faster and harder, because at the end of the day, there's a lot of people sitting around on a lot of old success. And that old success, right? Remember, Tesla got to this place because they went through incredibly tough times, right? They went through the hardest of the hard times. They went through a lot of bankruptcy talk for years and years and years, right? And through all that grind, all that effort that Elon Musk and the team was willing to put together there, they created this incredible company that now has a $700+ billion market cap. Listen, in order keep this going and become a multi-trillion dollar market cap, right? And have this company do incredibly special things that are a one-of-one type company, you have to keep pushing. Otherwise, we're going to, just like the saying says, right? Good times create weak men, and weak men create bad times. That's what's going to end up happening here at Tesla if we don't hold these folks accountable and we just always are sticking up for them. We're acting all cult vibe. This isn't politics. This is money, right? Like Elon Musk and what he does, that's, at the end of the day, your life, if you're putting your money into it, right, your life is dictated by how your investments do over time, right? And so your investments need to do well in order to buy the type of homes you want to buy in your life and live in or drive the sort of cars you want to drive, right? Live in the sort of neighborhoods you want to live in, right? Go on vacation when you want to go on vacation, retire when you want to retire. All those things are going to be predicated upon how your stocks do over time, how your investments do. And so if you're willing to just give all your companies a pass and a pass and a pass and a pass and make excuses for them all day, your whole life's going to end up going by you, and you're going to wonder like, man, maybe I shouldn't have been so soft on everybody, right? Because at the end of the day, we do know the only way you get great results from a team, from a company, anything, you got to hold everybody accountable on a high level. Apple would never have been able to do what it did without Steve Jobs. If you ever heard any stories about what it was like to work for Steve Jobs, it wasn't fun. But that company produced and did things that people never thought was possible. And that's why that company has a multi-trillion dollar market cap on it, even 10 years plus after Steve Jobs is long gone, right? Because they created such an amazing company there. And we now have a very special company here at Tesla, but I'm telling you, these good times that the company went through, I think it created a lot of weak men. And I'm worried, man. I'm worried, and we got to get it together. And if the whole shareholder base is just a bunch of little passive people that are like, just making excuses for Elon, we're in trouble there. And if we just want to give them the infinity timelines, you got to understand competition's coming. It really is coming now at this point in time. For a long time, it was just a bunch of crap. It's no longer just a bunch of crap. Look at what these Chinese companies are doing. Get educated on it. Get educated on what Waymo's doing. Get your head out of the sand, and you'll begin to understand. Stop being a yes man. Stop bowing down to Elon Musk. Start waking up. Start holding Elon Musk accountable and the team accountable. And then we might be able to get back on the right track, get 5, 7, 10 years ahead of the competition. Okay? Alrighty, first stock up here I bought is SoFi Technology. So about 400 shares of SoFi. Got those shares at $8.02 yesterday. SoFi, obviously incredible company that's really at the forefront of really innovating in regards to the banking space, in regards to their Galileo product on the tech side and how that's building out, as well as on the banking side for SoFi. They continue to take massive amounts of market share in terms of new customers, and they're selling more and more products to their existing customer base, essentially. Now, this stock is trading too cheap right now. It's on a 2-year forward P basis around 25. For a company that is as early days as SoFi, this is way too cheap for this company. I mean, SoFi is a company I think is going to be able to grow on average double-digit revenues for next 10, 20 years, if not for decades to go in the future. The long-term opportunity here in regards to SoFi is absolutely epic. And they're kind of by themselves right now, because when you look at the banking space, there's really no direct comp, in my opinion, to SoFi. You have the traditional banks there, JP Morgan, Bank of America, Wells Fargo, Citibank, all those sorts of guys, right? They're all focused much more on the old school business model of banking. You have a lot of branches, a lot of tellers, a lot of bankers, right? A lot of in-person interaction. SoFi's DNA, the way the company's been built, is dramatically different than those old school companies. This company's been built digital first, app first, Gen Z, millennials first, right? And so that's the sort of folks they're attracting, which keep in mind, if you're attracting a lot of millennials, a lot of Gen Z, the net worths are going to be lower at first, right? But as those people's net worths climb over 5, 10, 15, 20 years, then suddenly you have this person with a big net worth. And I give the example of JP Morgan getting me when I was a youngin', right? So back when I had first entered the workforce officially and got my first real job outside of working for my dad's pool business, cleaning pools, it was working as Einstein Bagels as somebody that cleaned dishes in the back and would take people's orders, right? And so when I got that first job at Einstein Bagels, I needed to set up direct deposit. Well, JP Morgan back then, Chase, had a, basically if you set up direct deposit and you had it set up for 3 months, you got a $250 bonus. I was making $7.50 an hour. $250 to me was like all the money in the world. So I'm like, heck yeah, Chase got me as a customer. And they've kept me as a customer to this day, right? And I went from that $7.50 worker that cleaned the dishes, right, to obviously somebody with a very high net worth, the 1%. That happened over a period of time. And JP Morgan, I'm sure, has made a lot of money from me, either directly or indirectly over time. Think about that for a moment. That's what's going to happen with SoFi now. They're going to get a lot of people that don't have very big net worths. And some of those people are going to grow to become top 10% income earners, top 1% income earners, top 10% of the net worth, top 1% of the net worth. And then SoFi is going to be able to build this massive business on top of that, right? And so SoFi is just, you got to attract the young generation, because that young generation, they're the ones that end up making all the money long term, right? Like that's the holy grail. So SoFi is the most well-positioned there. Double-digit growth for honestly decades. Now, as far as some numbers here, analysts have net income growth next year of around 66%. So I ran in my projections here on 1000xstocks.com. I ran at 12% revenue growth. Now, I think there's going to be a lot of years that are going to grow faster than 12% from 2025 to 2028. But I did 12% on average. Here's why. I feel very confident there's going to be a major recession in one of these 4 years. It's hard to predict, is it going to be 25 or 26 or 27? I have a very strong belief that there will be a major recession in one of these 4 years. And in that particular year, I think SoFi's revenue will basically be flat that particular year. They won't grow at all. And so that's why I have the revenue growth rates at only 12% on average from 2025 to 2028, because I'm kind of banking that there's going to be a major recession in one of those years. So net income growth, 66%, let's say that holds where analysts are at here. And then I have them only doing net income growth of 15% a year on average after that. I'd put net income margins around 18% for this company come 2028, right? Now, keep in mind, since SoFi is very early days, since they're more tech-enabled, they should always command much higher P ratios. So 45 to 55 is about right for a company that's going to be growing double digits top line, double digits bottom line, and then their assets under management should grow immensely over the coming years, because obviously when you attract the younger folks, their net worths go up, as we spoke about before. So I have this company basically doing me a compounded annual growth rate of 20% plus over the next few years. This is why I'm very, very attracted to SoFi. So that's why I bought SoFi. Next one up here is Nike, ticker symbol NKE on this one. I bought 118 shares. $9,400 worth of a move. I got those shares at $79.80 in regards to Nike. So Nike's a stock I'm banging the drum on for the next 90 days on this stock. The stock's down 4% in the past 5 years. That's a historically bad 5-year span for Nike. And I would say this is a stock you buy everything in sight for the next 90 days. If earnings come out, the stock drops, got bad guidance, blah, 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 I don't care. Buy the stock, buy the stock, buy the stock, buy everything in sight in regards to Nike stock. This is one of those great companies that I don't see not being great anytime soon. And this is, in my opinion, a truly historic buying opportunity in regards to Nike. Now, here's some projections for Nike I did here on 1000xstocks.com. I have them doing, on average, 9% revenue growth a year, 2025 to 2028. Keep in mind, their comps they're going to come off of here in 2024 are going to be cake. I believe China is going to strengthen next year. We obviously have the consumer getting in a better place over the next year because of real wages, inflation stopping to slice and dice people. And so the consumer is going to get in a better place. China, in my opinion, is going to strengthen over the next few years. And I think international growth in general will pick up for Nike. So I think they'll have, international growth there. I think they'll also have U.S. growth. So 9% on average. And they're going to come off of super easy comps. Something to keep in mind there. 9% on average. Net income growth, I have them doing that a much more rapid clip of growth here, 20% on average for the next 4 years, 2025 to 2028. The reason I have them doing 20% is if you look at all the cost-cutting measures they're doing right now, they're setting up Nike to run extremely lean 2026 through 2028. If you look at all the cost-cutting measures this company has basically going through. So given that I expect margins to uptick, gross margins to uptick over the next few years and have more pricing power and less discounting, additionally, you're keeping your entire business model lean and mean, whereas Nike, I think, had definitely overhired in the past because of some, kind of freakish growth rates they had. I think the net income growth is going to be way ahead of revenue growth. So 20% on average. That puts them at net income margins of about 15% in 2028. which if, Nike is the type of company, you're usually going to command somewhere between a 25 and a 30 PE for the stock, which that puts it at a compounding annual growth rate of about 21% on the low end, 27% on the high end. I got to bang the drum on this one. You want to buy every share in sight for the next 90 days in regards to this one. Anything you can get under 100, take it. If you can get under 70, under 80, like just count your blessings. That's my opinion in regards to Nike. And I think a few years from now, we'll look back and be like, dang, can you believe Nike was down to 70, 80 bucks a share? That was pretty historic opportunity there, right? Next one up here that I bought is Monster Beverage, MNST. I have a history with Monster. It made me a bunch of money back in the day. Sold out, didn't own it for years and years and years, and I'm just starting to buy it back here recently. Bought 100 shares, a little over $5,000 worth, paid $50.68 for these Monster shares. This is definitely one I would love to add any shares on any weakness, if we get any weakness in regards to Monster here, okay? By the way, there's certain companies I don't even worry about in recessions, anything like that. Monster would be one of those companies that's like, whatever, good economy, bad economy, deflation, inflation, it is what it is. So here's the deal. I love the compare feature on 1000xstocks.com because you're able to compare 3 companies versus each other. Trailing 12-month Ps, forward Ps, 2-year forward Ps. We got all types of advanced metrics, right? But looking here, I'm always thinking about the future. Next year, earnings per share growth, analysts have Monster at 20% plus. Coca-Cola at about 18%, which would be incredibly strong. Pepsi at about 10%. So Monster is not that far ahead of these guys in regards to a forward P, especially in regards to Coca-Cola. But the earnings per share growth is expected to be much, much stronger next year and in future years for Monster than Coca-Cola and Pepsi, and I think that's going to be true. Next year, revenue growth here, Monster's at 15% plus for analysts. Coca-Cola's at 4%, Pepsi's at 5% here. Now, if I can get a company that the 2-year forward PE is roughly in line with these other companies, but it has way stronger revenue growth, that means that other company's much likely a much better opportunity here, right? Now, additionally, here's where things get really interesting. I don't know how much I ever talked to you guys about gross margins versus net margins, right? But the way I kind of think about this, gross margin, Monster has the lowest gross margins of these 3. They're getting beat out by Coca-Cola and they're getting beat out by Pepsi. Yet, when you look at the net margin, after everything's taken out, Monster has a better net margin than Coca-Cola and than Pepsi, right? So what's intriguing there is I believe over the next few years, they're going to be able to increase their gross margin more in line with a Coca-Cola, in my opinion. Now, given the company is so lean, right, that net margin could actually explode much higher than where it is right now, which would be very exciting for the earnings per share of this company. Never mind if they're doing share buybacks on top of that. So I think there's actually a lot of room to still move this net margin up further, given the fact that I think their gross margins, there's room to expand that here over this next few years. So I like what I see here. I really like what I see here as far as the setup for Monster overall, right? Now, that leads me, also, keep in mind, Monster is also a hedge. And it's a hedge for this position right here. Celsius, which is now 300 shares, over a $10,000 position for me in the public count. Monster is a hedge for this because I'm just trying to bank that, what if I'm wrong on Celsius? What if Celsius is just what if they have trouble growing the company and it's just they've got a good customer base there, a loyal customer base, but they have trouble attracting a new customer base? I just got to price in the risk of that. Now, if that does happen, I think the biggest beneficiary by a mile is who? It's Monster. If Celsius stagnates, the biggest winner from that at the end of the day is Monster because they own not only Monster Energy, they own Rain Energy, which the way they're positioned in Rain Energy is kind of very similar competitor to Celsius. They also own Bang Energy, which has shown very strong growth rates recently. They're getting that brand back positioned in a really good place for the first time in many years. They also own a bunch of other smaller brands. So Monster has a little bit of a monopoly on the industry. They obviously have Red Bull that they've always been dealing with as a competitor. And then they have Celsius. So what if I'm wrong on Celsius, right? Which I don't think I'm wrong on Celsius, but what if I am? Then Monster's a hedge against that because Monster should benefit while Celsius doesn't benefit, right? And that leads me to Celsius. I bought more shares of Celsius in the public count. I bought 150 shares, paid $33.08 for those shares. That was about a $4,900 move, which is why I now have 300 shares in the public count of Celsius. So in regards to Celsius, first off, this is a historic drop. Keep in mind, in order to see 62% drops in a stock in a 6-month span, usually you're only going to see that in a crashing market, where the S&P's plummeting, where the NASDAQ's plummeting, where the Russell's plummeting. We don't even have that. Market's been decent the past 6 months. And yet, what does Celsius have to show for it? A 62.5% drop. This is a historic drop for the stock. Absolutely brutal with a capital B. With that being said, this is because of obviously the slowing growth rates in a substantial way. And this is a risk of people investing in high growth stocks, right? Because when that day comes and the growth rates aren't quite what they were, people get freaked out, they sell the stock and they panic. And that's why the stock has fallen a historic 62.5%, right? You have a lot of people that move out. You have so many people sell at losses, right? There's been a lot of retail. I bet you there's a lot of retail investors that were buying the stock close to $100, that were buying at 90, 80, 70, 60, 50. The losses are brutal for those folks. And I can tell you they cash out. And when I say cash out, I don't mean they profit out. They sell for losses, right? And then you have that happen in the market in general. It's just a vicious, brutal cycle to go through. And it's what Celsius has had to go through, right? Stuff like this doesn't help. You see this coming out here on September 12th and the 13th. John Finlay, the CEO, had a total sale of over $21 million of the stock. He sold it at weighted average prices at $32.80, $34.36. Some of his options activity, but at the end of the day, people just don't like any sort of headline around this, which gets into when are you supposed to sell as a CEO? Because people don't like it when you sell when the stock's high, because then they say you must know the stock's crashing, it's going to crash, right? But then if you sell it when the stock's crashed 62% like Celsius has over the past 6 months, and people are looking at like, why are you selling the stock right now? Like, are you kidding me? Of all times, are you selling right now? It's not a good look, right? And this just adds to kind of the insult to injury that's going on in regards to Celsius. This has been brutal, brutal, brutal. Now, I believe the epic growth days for Celsius are over. And when I say epic growth days, I'm talking about the 30, 40, 50% type growth days. I think those are over for Celsius. I do. I hope I'm wrong on that, because if I'm wrong on that, Celsius is going to make me so much money, it's going to be disgusting. But with that being said, I think that's over. I think Celsius is going to, from 2025 to 2028, I think they're going to do like an average of 15%-ish revenue growth a year. On average, right? There's going to be some years they might grow 20, 25%, something like that. Some years maybe under that. I don't even really see under 15%, but 15% is my average. I have them at, okay? So net income growth, they should get some leverage here, so I have them doing about 20% net income growth on average year. Puts them at net income margins of about 18% in 2028. Now remember the net income margins of Monster here, right? Net income margins of Monster, 22%, so this would be significantly under still, like a Monster, but keep in mind Celsius is still, even in 2028, Celsius is still a very early days business model compared to a Monster. So Celsius might eventually have a day when they get to 20, 22%, 24% net income margins, but it's not today, right? And it's not in 2028 likely either, in my opinion. I think 18% is pretty realistic for them to get to in 2028. Now, if Celsius is growing 15% top line on average, 20% bottom line on average, and you've got net income margins of 18% in the drink industry, they're going to easily be able to command a P/E ratio somewhere between 30 and 45 for the stock, because the growth rates are so far ahead of where the market's at in general, and then seen as a very safe company because it's a drink company, right? So they put the stock price somewhere between about $67 and about $100, which is giving a compounded annual growth rate on the low end of about 18%, on the high end of about 30% for Celsius. This is what makes Celsius very, very attractive as a stock to buy now. It's a beaten down dog. It's a falling knife, right? I'm never scared to catch falling knives. I just don't care. Like, if it's a falling knife and my hand gets sliced, I don't care. All I care is that I caught the knife. That's all I care about. Like people are always like, well, it's a falling knife. Like, maybe it goes to 25. Sweet. My income and expenses are in a good place, as everybody's income and expenses should be in a good place, right? What does it mean to have income and expenses in a good place? You have more income than expenses every single month. If you don't have that, if you're watching this video right now, and you are somebody that does not have more income than expenses, you need to get on that. Like, what is going on? Like, you got to figure it out, man. You got to have more income than expenses every single month. I've been doing that since I was like a minimum wage worker. I'm still doing that to this day. That's goal number one. So whenever I hear like, oh, the stock could fall to 25, it could be even scarier. Okay. As long as I like the fundamentals of the company, I don't think the company's broken, I'll buy more shares. It's fine with me, right? I don't mind catching a falling knife. There's also a risk that I don't buy it at 32, 33, and then the next thing you know, the stock's 43, 53. And then I'm like, I could have made so much money, and why didn't I own that stock again? Like, why didn't I buy that, right? So that's a little food for thought in regards to that one. I like Celsius. Next one up here that I bought is Cheesecake Factory. So this is I think it's the most underrated stock in the entire stock market. I truly do. And the reason being is people hear Cheesecake Factory stock, if they even hear Cheesecake Factory stock, right? Everybody's so tied up in tech stocks all the time. I don't even think they get to these restaurants' names. But they still think Cheesecake Factory, they think about just the historic brand that is Cheesecake Factory. They think, oh, there must not be much growth there. What they don't understand is North Italia as well as Flower Child Concepts and how much insane growth those two brands have over this next 10 to 20 years. We're not talking about this as just the next year or two of growth. We're talking about major growth for those brands for the next 10 to 20 years, the next 1 to 2 decades, right? And so people are totally missing it. They're valuing the stock at like a forward P of like 11, which is just laughable in regards to this one, when I view this as actually a growth company that people don't see right now. And I think they are going to wake up and they will see this over the next few years. And then they'll be like, oh man, like how did we miss this one? And I'm going to be sitting back on my shares looking like, I found another one that you guys weren't on. This is another Elf Beauty situation here, right? So in regards to K, I've been doing on average revenue growth of 9% per year, 2025 through 2028. I've been getting a little bit of leverage in regards to that bottom line and doing about 12% net income growth. And the reason being is I believe North Italia and Flower Child margins are going to be exponentially higher as those brands build out than the historic Cheesecake Factory. And the reason being is the historic Cheesecake Factory, massive locations needed for those, right? Incredible amounts of staff. You're talking about, people usually sitting down at the Cheesecake Factory for 1-2 hours or taking up tables for a long time. North Italia's margin profile is just set up a lot better, and the reason being they're just really, really good at selling liquor at North Italia. Flower Child's concept set up to be very high margin because they can get people in and out quicker, and they do a lot of to-go business, like an incredible amount of to-go business at Flower Child. And so I believe the margin profiles of North Italia and Flower Child are quite a bit higher than Cheesecake, and we'll really see that over the next 3, 4, 5, 6 years as those brands get bigger and bigger. And you actually see, in my opinion, you'll see Cheesecake Factory's overall margins, and I'm talking gross margins and net margins. I think you're going to actually see those uptick very nicely over this next 4 or 5 years. And I don't think a lot of people are really expecting that, just to be quite frank. And that's why I have their net income margins getting to 5% plus in 2028. I had this company commanding a P somewhere between 20 and 25. This forward P 11 is going to go bye-bye, in my opinion. When you're talking about a company that, in my opinion, is going to be growing high single digits a year revenue and low double digits net income per year, I believe this company will start to command a 20 to 25 P, which is not high. That's like in line with the market. It's just not as silly ranges like it is now at 11. So we go 2025, which is roughly in line with the market. And keep in mind, these growth rates are higher than the market on average. We're talking about a stock in 2028 that's between $94 and $111. It gives me a compounding annual growth rate of 25% on the low end and 32% on the high end. And keep in mind, Cheesecake is a dividend payer as well, which will actually help out the compounding annual growth rate even more. So the moral of the story is Cheesecake is, in my opinion, the most underrated company in the entire stock market. And I think I pay attention to just about every company out there. I mean, it's ridiculous. So I think we'll see it play out. I could be wrong. I think I'll be right in regards to this one. And that's why I'm investing pretty aggressively in this one. And I'm not really planning to stop. Even if the stock goes 45, I'm still probably buying. As long as it's under 50, I'm probably still buying Cheesecake. You got to understand, I'm already up on Cheesecake Factory shares. And I'm willing to go up. I'm willing to buy even though the stock price is higher than when I started buying. That doesn't happen for me that often. Usually I'm willing to buy the dip and buy the dip and buy the dip on a stock. For me to say I'm up 10% on a stock or 15% or whatever, and for me to say it's still so much of a steal deal, I'm willing to buy more shares and ruin my cost basis some, right? For me to raise my cost basis, there's got to be something there. The risk reward has to be so attractive that I say, I don't care. Like, this is too big of an opportunity. And that's why I view Cheesecake Factory stock. And we'll see how it all plays out here, right? Next one up here, Estee Lauder, EL stock. I bought 125 shares of this one. $84.89 is the price I paid for these. Over $10,000 worth of shares. Estee Lauder, by the way, high-end cosmetics, beauty brands. They own some of the most well-recognized, best beauty brands, cosmetics brands literally in the world when it comes to Estee Lauder. And keep in mind, in regards to Estee, they do have 1 or 2 brands that does focus a little more on the lower end market. For instance, they have a brand called The Ordinary, which you can find at like Ulta, which is still really good quality products, but they're at relatively cheap price points. So I don't want to make out like Estee's only on the high end and they're only selling $50 and $100 products. That's their main focus, but they do have some lower end brand or two. So just a little food for thought in regards to that are more like mass market, that could be a little more introductory into kind of the Estee Lauder overall brand scope, right? Now, 2025 is a year this company really gets back on track, in my opinion, in regards to major earnings per share growth and revenue growth. 2024, I view this as kind of the stability year. Like we're stabilizing the business now. 2025 is back in terms of getting exciting again in regards to earnings per share growth. So analysts obviously have earnings per share growth taken off to the moon next year, and then revenue growth going back to double digits rates was where the company used to grow at back in the day, right? Now, for Estee Lauder, keep in mind, inflation going down and not being a problem anymore is going to help the consumer immensely. And this is going to help a company like Estee Lauder as much as anybody, right? Because if we really think about the consumer in 2022 and 2023, I mean, inflation just really hammered them. And we're feeling the effects of that in 2024. Look at all these consumer brand companies. They're not doing so well in 2024, right? And in regards to their numbers, that is. Some of their stock prices are coming back because people are kind of pricing in the future. But as far as the numbers go, they're not good. So being that U.S. government inflation is now in the twos, true-flation is now in the ones, inflation's going from a headwind against the consumer, against people, to a tailwind over the next 1 to 2 years. So in 2025 and 2026, my opinion is the sales of companies like an Estee Lauder are going to increase quite dramatically because just you're not going to have that pressure of the inflation being put on everybody like you've had over the past few years. Now, the one kind of caveat here is if the employment market doesn't hold, then all bets are off, right? Like if all of a sudden unemployment goes to 7, 8, 9%, all bets are off because that's going to cause damage out there. But keep in mind, this is something you always got to remember in regards to these consumer brand companies, Nikes, Estee Lauders, and things like that, right? Let's say you go to 7% unemployment. You could make an argument that you'd much rather have a 7% unemployment rate than an insanely high inflation rate. Why is that? Well, if inflation is super high, it hits everybody. Everybody gets hit by that. If you have a 7% unemployment rate, which is very high, it hits not everybody. It hits a much smaller portion. So this is why some people make an argument that the worst thing the economy can ever face is actually what? Inflation, not unemployment. Nope. Not even global geopolitical situations. The worst thing for a lot of people in terms of the view is always inflation, because that hits everybody. There's not one person who doesn't get hit by inflation, right? So this could actually be a huge tailwind for companies like Estee Lauder. Consumer sentiment's been in the trash can for years now at this point in time, right? Basically ever since Rona, it's been low, but in regards to this inflation cycle we went through, as far as consumer sentiment, it went to insanely low numbers. Estee Lauder sells brands that are confidence brands, right? If you're paying $50, $100 for a cosmetics product, this is a confidence. You got to feel confident about your financial future. If you buy one of my other company's brands, Elf, right? That's not a confidence buy. That's like, I need some beauty products I need to buy. Buying Estee Lauder top tier products and brands, that's a confidence buy. You're trying to get the best of the best, right? And in this period, Estee did very good for a long time. People would say the 2012 through 2019 economy was a very good economy. Why was it? The employment market kept getting better and better from 2012 to 2019. Additionally, taxes were favorable over that time. Additionally, we never had major inflation during that time. So we never had to worry about major inflation. The employment market got better, right? Taxes were obviously in a pretty good place, and consumer confidence was incredibly high during that particular time, right? And look what happened to Estee Lauder's worldwide sales. It went from $9.7 billion in 2012, right, to almost $15 billion in 2019. It increased very nicely. And their net income increased massively, their earnings per share, their margins looked phenomenal during that time. That was a great time period for Estee Lauder, a phenomenal time period, right? And I think we're going to get back on the right track in regards to Estee. And we'll see a lot of strength come in Estee over the next several years. Now, if they could land a real deal Holyfield CEO here, then we could talk about really exciting times ahead for Estee Lauder. If they landed Tarang from Elf as their CEO, I might buy 6 figures of the stock the next day. I'm not kidding you. I'm not kidding you. If they got Tarang to be their CEO, which I'm the only one who's floated that idea yet, so if it ever ends up happening, I better get some legendary applause for that one. Ooh, oh my gosh. I'll buy 6 figures the next day. The next flipping flapjacking day, even if the stock was already up 10, 15, 20%, just because that would be so massive for this company overall. Now, let's go ahead and take a peek at the public account. Let's talk about changes I might be making here. So this is the entire public count here. This portfolio is $2.3 million portfolio plus, right? This is available for everybody in my private stock group. They've been able to see every move I've been making in regards to this portfolio since the beginning, right? And we're top heavy. There's no doubt about it, right? Meta's an insanely huge position. It's $911,000, which, by the way, I think Meta is about to pay out their dividend, their next dividend, which is very exciting. But yeah, that position is ridiculously sized. Tesla's ridiculously sized, but I don't have as much of an issue because look it's a $911,000 position, but the gains are $710,000. So it's not like I put in like some insane amount of money. It's just Meta's been such a great stock for me that it's gone up a lot, right? Same thing with Tesla. Tesla's a $341,000 position, but I'm sitting on $297 of gains, right? So that's a little food for thought in regards to that. So although it's very top heavy, it's not like I put in a crazy amount of money to make it so top heavy. It's just those stocks just did so amazing, right? PayPal's starting to come along very nice. Man, I like what Alex Chris is doing with that company. Oh, do I like it. The stock's still a buy, by the way. I know it's gone up a lot recently. I'm up around 15% now on the stock, but I can tell you, PayPal's still a buy. It's still a buy. And even when it goes to $90, it's still a buy. So it's just a little food for thought in regards to that one. Palantir is an animal. Palantir is a flippin' flapjack animal. Don't be surprised if this one runs again into that S&P 500 inclusion. It'll probably pull back eventually. The pullback might happen in October, November, something like that. But we'll see if we roll the 40. I wouldn't be surprised if it rolled the 40. I don't know. We'll see. We'll see. Amazon's looking really good here. I love Amazon. Now, I have these in red here. And the reason being is these stocks, I can't buy any more shares. These stocks are either a hold or a sell. Not because they're bad companies, certainly, some of the creme de la creme, right? But the position sizing is just so large on them in this overall portfolio that I can't really take more risk here for these guys, right? So, like if Meta was 700 today, I would actually probably take 200 shares. If Meta was 600 today, I would probably, let's say somebody offered me $600 for my Meta shares, I would sell 100 shares at 600. And what I would do is I'd deploy that money down here to these green ones. These are the building positions. If I could get Meta at 700, I would sell another 100 shares on Meta and then hold about 1,500 shares. That's kind of my thought process in regards to Meta. The stock is still a steal deal. It should run to 600 in the short term. It should run to 700 short term, honestly. Long term, Meta is probably $1,000 to maybe a $1,200 stock long term, right? So still a lot of gains to be had there. The dividend, I love collecting those dividends from Meta because you could run the math on how much I'm getting in dividends. It's a pretty nice amount every 3 months, and I'm able to invest that into other companies, right? Tesla, we'll see what happens with Tesla. Not the most happy, obviously, with how the company's been run the last few years. But with that being said, still got a lot of faith there, just not as much as I used to have. And 10/10 is going to be a big day for Tesla. I'm talking a big day. Because the thing with Tesla is we've got to come out of that 10/10 day and not just feel like, we got to just not feel like, they're going to do all these big things in the future. We also have to feel like this is going to happen. Like this is for real, right? Like this is going to happen in a timely fashion, not like this is going to happen 5-10 years in the future. PayPal, obviously love the way that one's run. Elephant Revolve, these are more blues. So I put these kind of in that. They're a little bit in no man's land right now. I'm not looking to add to these stocks in this particular portfolio. I'm also really not looking to subtract those stocks in the portfolio either. They're just kind of in no man's land. They're just holds. These stocks I'm looking to buy more shares of. Cheesecake Factory, Nike, The Planet, SoFi, Fubo, Estee, Celsius, Monster. The only difference is that I'm looking here is for these sorts of stocks like a SoFi, for Fubo, for Planet, I have to hold position sizing smaller. And the reason being is SoFi is a bank, right? I don't love banks. because they have risk of bankruptcy, right? Planet SPAC, so I have to watch position sizing on that. Fubo, I have to watch position sizing on that. I'm hoping either Fubo or Planet turns out to be one of those 10x type opportunities, right? And we see that position go to $250,000 or $420,000 or something like that. Hey, 420, that would be amazing, right? Celsius and Monster looking to add more to those sorts of stocks. I love those companies. They're just easy holds. Estee, definitely want to build that position bigger. Love to build Estee into a much bigger position than 22K there. So overall, loving the public account. And it's been a very great year for the public account in terms of gains, in terms of profits taken in this portfolio. Now, a great thing for the private stock group is they get access to see all the moves I'm making in this portfolio. When I go to sell something, buy something, I buy stocks in this portfolio every single week. So you, as being in the private stock group, you get to see the stocks I'm buying and selling every single week and exactly how I run a big dog, real money portfolio, right? Which I think is very valuable to kind of learn like how I position, how I think about these things. I talk about why I did it, right? And that's on an every week basis. And so I think that's one of the big advantages. Plus, in my private stock group, you get access to all my best course curriculums, access to 1000xstocks.com, all those sorts of things. So if you're looking for access to that, click the pinned comment down there, fill in an application. We'll see if we can get you access to my private stock group, private wealth group, 1000xstocks.com, maybe next week. All right, guys, appreciate you joining me as always. Much love and have a great day.